Hey everyone, welcome back to the channel, and thank you so much for joining me today. If you've been following my content for a while, you already know that I'm always digging into overlooked corners of the market areas most investors walk right past without realizing the potential sitting right in front of them. And today, I want to share something that has been grabbing my attention in a big way. Over the past several weeks, I've been analyzing the sub-$1 stock universe, specifically focusing on emerging sectors that are undergoing dramatic shifts heading into 2025. During this deep dive, I uncovered 3 incredibly interesting penny stock opportunities that are all trading under just $1 right now. Now, I know what many people think when they hear the phrase penny stocks. They imagine risky, unstable companies with questionable futures. But here's what most investors completely overlook within the penny stock category. There are real businesses with real revenue, expanding markets, scalable models, and genuine long-term potential. These aren't dead-end companies. These aren't hype-driven shells. These are legitimate, undervalued organizations positioned in high-growth areas where innovation, demand, and industry transformation are accelerating fast. The only reason they are sitting at these extremely low price levels is because microcap stocks often get ignored by mainstream analysts, overshadowed by market volatility, and misunderstood by retail investors. Today, I'm going to break down each of these 3 hidden gem stocks, explain what makes their business models promising, and most importantly, show you why I believe they offer powerful risk-reward setups for investors who understand emerging opportunities. So stick with me as we go through 3 penny stocks under $1, one that could potentially deliver significant upside in 2025 and beyond. The advertising and digital marketing landscape is enormous, with hundreds of billions of dollars flowing through traditional media, social platforms, experiential campaigns, and emerging technology-driven channels. Yet despite that size, the industry remains deeply fractured. Thousands of agencies operate across different verticals, specializing in unique service models and targeting distinct geographic regions. This fragmentation creates gaps that innovative, under-the-radar companies are stepping into with surprising force. What's becoming increasingly clear is that niche advertising segments such as immersive brand activations, digital engagement tools for developing markets, and specialized creative services are expanding far faster than legacy ad formats. And the 3 companies we're looking at today are all positioned directly inside these fast-moving niches, each with a differentiated value proposition and measurable commercial traction. Our first opportunity is a broad-scale marketing and merchandising provider serving consumer brands and large retailers across North America, Europe, and the Asia-Pacific region. Trading for just under $1, this company recently fell from a multi-dollar range despite generating massive revenues. To put this into perspective, this is not a microcap experiment. This is a multi-billion-dollar service platform structured around 3 major segments: brand-focused services, experiential retail execution, and retailer support solutions. The company delivers a wide array of capabilities, including category management, merchandising strategy, store execution, analytics, supply chain coordination, and private label brand development. Even more impressive, it ranks among the top 10 agency groups in North America and top 20 globally. Despite the share price decline, management is aggressively implementing transformation initiatives to streamline operations, enhance margins, and reposition the company for more stable growth. Because the company maintains deep relationships with major CPG brands and top-tier retailers, analysts continue issuing bullish outlooks with price targets, suggesting significant potential upside from current depressed levels. Our second opportunity sits squarely at the intersection of creative design, emerging technology, and digital brand activation. This company specializes in immersive marketing environments, virtual reality development, augmented reality enhancements, interactive character IP creation, and social media-focused promotional services. Trading for well under $1, the stock has faced dramatic volatility ranging from multi-dollar highs to sharp lows, but the underlying business remains firmly positioned in a rapidly expanding niche. Headquartered in Asia and serving markets across the region, the company reported steady revenue growth, operational profitability, and increasing adoption of its tech-driven advertising solutions. As brands continue searching for new ways to capture consumer attention, the importance of immersive, digitally enhanced experiences is accelerating. VR and AR campaigns are no longer experimental. They're becoming essential components of modern brand strategy, especially for younger, tech-native audiences. Unlike many small agencies claiming to be future-focused, this company actually develops and deploys immersive campaigns at scale. Its capabilities span metaverse experiences, 3D world building, event simulations, gamified marketing concepts, and digital identity creation for corporate and entertainment clients. These offerings place the company ahead of most mid-sized competitors who lack the technical infrastructure to deliver similar services. Another key advantage is its ongoing expansion strategy. The company continues broadening its service portfolio, acquiring complementary design and production assets, and building a diversified pipeline of clients. Despite achieving profitability, its market cap remains extremely small, reflecting minimal market recognition rather than a lack of business potential. For investors who understand the long-term trajectory of immersive media and the importance of digital-first advertising experiences, this company represents a compelling and undervalued opportunity with a favorable risk-reward balance. Our third opportunity focuses on experiential events and branded entertainment, one of the fastest-growing areas in the advertising world. Based in Asia, this company provides themed event management, trade shows, exhibitions, conference setups, branded attractions, and IP-based interactive experiences. Trading at only a few cents, the company recently debuted through an IPO, but quickly experienced a steep post-listing decline. It's primarily due to customer acquisition challenges and uneven demand across the event sector. However, a major turning point recently emerged. The company secured a multi-million-dollar equity facility from an institutional investor, signaling external confidence in its long-term business model. This injection provides essential capital to support operations, expand service offerings, and stabilize short-term cash flow during a period of restructuring. Despite its small size, employing only a handful of full-time staff, the company operates in a market that's rebounding quickly. As consumers increasingly look for real-world experiences, brands are allocating more budget to live events, immersive shows, themed attractions, and interactive promotional setups. And because this company specializes in events built around recognizable intellectual property such as animated characters and entertainment-based story worlds, it holds a competitive advantage in securing higher-margin projects. Beyond events, the company is broadening its horizons with new initiatives, including ticketing platform development, strategic acquisitions, and expanded IP licensing agreements. These moves could transform its revenue model from simple event execution to multi-stream entertainment monetization. While early-stage and highly speculative, the recent capital raise demonstrates meaningful institutional belief. For investors willing to accept higher risk in exchange for potential exponential upside, this company may offer a noteworthy opportunity in the booming experiential marketing space. What ultimately connects these three sub-$1 advertising plays is the simple fact that each operates at a different phase of development. Yet all are priced as if long-term success is nearly impossible. One company is a once-dominant platform navigating a major reset. Another is a lean and profitable tech-driven advertiser trading at a valuation that makes no logical sense. And the final one is a freshly capitalized early-stage disruptor, signaling strong institutional belief in its direction. If any of these companies execute even modestly, if revenue expands, if partnerships land, or if industry trends fall in their favor, the upside potential from these suppressed levels could be genuinely meaningful. But before anything else, it's absolutely critical to acknowledge the real risks. These are highly speculative positions with severe volatility. The first company is battling shifting market conditions, operational restructuring, and uncertain profitability stabilization. The second company is tiny, with limited revenue and heavy pressure to scale efficiently in a competitive digital ad environment. The third company sits at the earliest stage, with high cash consumption, execution, uncertainty, and potential dilution as it grows. Any of these stocks could fall further. You could lose a significant portion or even all of your investment. These are not suitable for cautious or income-focused investors. That's why disciplined position sizing is non-negotiable. Never concentrate too much capital in any single micro-cap advertising stock. These should be treated as strategic, opportunistic entries, nothing more. Take the time to truly understand what each company does. Examine their filings. Evaluate their clients, revenue models, and growth assumptions. Do not rely on my analysis alone. Use this breakdown as a springboard for your own research, your own due diligence, and your own convictions. Know your exit targets, know your stop losses, know exactly why you're entering, and exactly when you'll walk away. This deep dive helps spark new ideas. I'd love to hear your thoughts. Which of these sub-$1 advertising companies do you think has the strongest potential? Share your insights in the comments. And if you found value here, hit that like button and subscribe. It makes an enormous difference. Thanks for watching. Remember, smart investing begins with understanding. Stay disciplined, stay intentional, and never risk capital you can't comfortably lose.